down close to around 100 points. Second day running, we are seeing some kind of pressure. But the broader pain really is, in the broader markets. Case in point being a Keynes Technology. All of a sudden, that stock has fallen off the cliff. In fact, Dixon Technologies as well has moved lower. But there are spurts of stocks that are doing quite well. A stock that we explained close to around an hour or so ago on the channel, Reliance Industries, could probably be an aluminium ancillary play. That, in fact, has made a high as we speak, currently at the high point of the day on very, very large volumes. Hey, guys.
Nigel, hi, good afternoon. And, it's quite incredible the influence that one stock can have on the Nifty. The Nifty is down 106 points. And guess how much Reliance is single-handedly putting the pressure by. It's 117 index points, negative pressure coming through in Reliance. Just that one name. The second one is not even close. HDFC Bank putting another 55 point index pressure. And Trent is at number 3 with about a 16-odd point pressure at the index level. So, 100-point cut in the Nifty and almost entirely all of it just on account of that one name up on your screen now. That's what I'm referring to. Unlike yesterday when even though the Nifty slid and was sideways and was down actually, but broader market looked much more buoyant with volume price action, both, giving that sense. Today, not so much. It's 2:1 clean declines to advances, 2 down for every 1 up, and almost equally split between volume-led gainers and volume-led losers. So a little more, it's a little more sour as compared to what we had in trade yesterday. Rima, hi.
Hi, some reversal seen in banking names. So Kotak Mahindra Bank had started trade higher. The street liked the advances, deposits growth, etc. But now Kotak Mahindra Bank is down, I think, close to about 2-odd%. 1.9% lower on Kotak Mahindra Bank. I guess the street is looking at the CASA deposit, which is flat on a quarter-on-quarter basis, and that could put pressure on the margin. So Kotak Mahindra Bank has had a reversal since morning. The other one is IndusInd Bank. Disappointing numbers, the loan growth actually contracted, but IndusInd Bank has actually rebounded, and that's up close to about 1.5%, and it's holding up those gains. Maybe it's seen as a bank in transition, and therefore the street is still betting on the story to play out. A couple of the other mid-caps which are still managing some grain, MV Photovoltaic, we've been talking about it on the back of the brokerage note. Nalco in the metals pack is up. Divi's Laboratory has a gain of about 3.5%. Ekta in the morning was telling us about the City note. They put a target price of 9,140. They say 2026 could be an inflection year for Divi's Laboratory. They've got a strong pipeline of catalysts in the next 12 months, starting with the GLP-1 opportunity, probably in H1 or H2 of 2026. So Divi's Laboratory is up close to about 3.5%. IIFL Finance, maybe a rub-off impact of the gold loan, the strength seen in the stocks with a gold loan portfolio. So IIFL Finance too is up and about. But other than that, it's disappointing trading session, down close to about 0.5% on the benchmark indices. Let's also tell you what we've lined up for you on our show today. So the markets trade weak on the Nifty weekly expiry day. The index has slipped 0.5%, but holds on to the 26,100 mark. Big fall in Reliance Industries way. Pockets like metals continue to see buying. Pharma too is a big gainer. Banks are flat in trade. Trent is the big accident of the day. The stock has slumped 7%. 17% revenue growth in the third quarter disappoints the street. We'll get to the details on this in just a bit. And a number of stocks are surging on the back of bullish brokerage views. We spoke about Divi's Laboratory, the City note. MK has raised the target price on Bajaj Auto, while the Jefferies note on MV Photovoltaic has also seen the stock surge 10%. But let's begin the show with getting you the last hour trades. Mitesh Thakkar from Bonanza Portfolio is now joining in. Mitesh, what are the levels that you're watching for and the trade?
Yeah. So, good afternoon. The bad thing or not so positive thing which has happened is that the market has started trading below 26,200. Now, if we get a closing below that, I think I'll take that as a slight negative and exit the long position. So we have another 45 minutes kind of a thing to recover. Then, we might be back into the range of 25,900, 850 to about 26,300 on the upside. And therefore, right now in the middle of the range, you wouldn't want to carry any kind of directional bias. On the stock side, I have a trade which is on the one buy and one sell. On the buying side is Torrent Pharma. That's a stock which has done very well. Torrent Pharma is a buy. Keep a stop at about levels of 38.78 for targets of 4,000. And on the selling side is InfoEdge, Naukri, as the stock is referred to as. That's a sell with a start at about 1350 for targets of around 1275.
Okay. In fact, the top gainer sectorally is the Pharma index. That's up 1.5%. IT2 has seen a bit of a rebound. That's gaining about 0.5%. But the big story today and the question among investors across is, what is the key reason behind the sharp 7% fall in trend? The stock has been making fresh lows every single quarter now. Mangalam joins in with a deep dive. Mangalam.
Well, if you look at it, the question is trend out of trend? There are a bunch of reasons for that, and we'll talk about all of them in detail. The reason why the stock is lower is because of the third quarter update, where the revenue grew 17%. Now, you would say 17% in this environment, not particularly bad. But look at how the company's historic revenue growth has been versus what they've guided for. And in that context, how does this number look like? 17% for the third quarter is actually lower than what the company's done for the first 9 months of this year. Typically, at a time in the second half, does a lot better for the consumption space. And then it looks lower when you compare it to the FY26 target that the company had given at the start of the year, the analyst meet as well, saying that 25% is a sustainable compounding growth rate for the revenue. And over the last 5 years as well, the company's revenues have compounded 38%. And if you compare that to the 17%, is less than half of that as well. Brokerage is not particularly happy on a couple of things. One, Citi's reiterated their sell call. Their target is 43.50, while the revenue growth of nearly 17% is largely in line, if not marginally better than own expectations of 15.3% over the last 1 year. What's a big positive is that they've added a lot of stores. But having said that, revenue hasn't kept up with the pace of store addition, which implies that same-store sales growth has been negative and average revenue per square foot has been negative as well. Now, this could weigh down on the EBITDA when the company reports its numbers. The second part, the valuations. Now, one would argue that, at peak, the stock was trading at 140 times, 5-year average is 95 times, and the current valuations are 72 times itself. But in isolation, PE is not what determines trends, valuations in particular. You got to look at it with growth as well. So when the stock was trading at 140 times, the revenue growth of the company over the last 3 years on a compounded basis was 55%. Divide that by, the PE, divide the PE by growth, the PEG ratio that you get is 2.5 times. Now, the stock has fallen almost 50% from the highs, trading at 70 times, but the sales has fallen even faster. So now if you look at the PEG ratio, then it's at 4 times. So even on an absolute basis, when the stock has fallen and a PE basis, the valuations have come off as well, growth's fallen faster, and as a result of which the stock optically on a growth basis, PEG ratio basis, has become a lot more expensive despite falling, and that's the conundrum out here. So from here on, what is it that we are tracking for trends? Same-store sales growth trends for both Zudio and Westside, whether there will be any recovery in sales given the government boost to consumption in the second half of this year. At the same time, growth in their newer formats, which haven't yet, caught the street's fancy as Zudio did in Star Bazaar, Utsaah, or even the latest entrant, Burnt Toast. And finally, nothing is fraught without risks. So you just look at, further slowdown in consumer sentiment. When Zudio had the head start, there wasn't Ustar, Shein, Intune, or even Own. Now this space is getting a little crowded. And by design, Trent or Tata Retail does not have much presence in online fashion. Could that be a growth impediment going forward or not is something that we'll get to know soon.
All right, that's a trend for you. And there's a 9% cut now coming through on the stock. I just want to make a quick mention of, let's put up Reliance Industries as stock, right? I mean, you would imagine, well, no connection at all, absolutely completely different lines of businesses and et cetera, et cetera. But there is, and you wonder why the stock is down 4.5%, but at some level, there is a little bit of concern at the margin that maybe, and Reliance Retail, which of course is a very significant part of, RIL's SOTP valuation, whether that is undergoing, is perhaps seeing a little bit of a slowdown, as is evidenced by numbers from Trent and actually others who've reported recently as well. So, I mean, that is, one perhaps factor which is being talked about. I just want to sort of highlight that before we go any further. So, 1507, as I said, single-handedly largely responsible for the 100-point cut on the Nifty.
Okay, let's get in Dharmesh Kant, Head of Research, Chola Securities, on the show. Dharmesh, let's begin with Trent. What have you made? As Mangalam pointed out, that even now, after the correction of more than 40%, it's trading at a PEG ratio of 4 times. But at peak valuations, when the PE valuation multiple was 140, 150 times, because growth was so strong, the PEG ratio was only 2.5 times. What from here for trend?
Yeah, good afternoon, Rima. Very nicely, detailed out about the trend analysis by Mangalam. But I mean, we were negative on this company since they reported their September quarter earnings last year itself. From there, we have consistently maintained a negative stance, and I have been on record about this, that the stock prices will correct to the valuation multiples. And see, 17 times is the growth they have reported. Doing a 25 to 30% kind of a growth would be a Herculean task for this company. And to my mind, even if that is achievable, then also 40-45 is the PE multiple which this company will command. So having that in mind, and you can always extrapolate the earnings multiple, and then you can see the valuation. To my mind, for next 2 years, getting beyond 5,000 stock price would be very difficult for trend. And this has to be looked in conjunction with a V2 retail. They came out with a same-store sales growth of only 2%, and V-Mart it was a flattish kind of a same-store sales growth. So this kind of a business have a natural tendency to normalize over a period of time. After the first 3 to 5 years, they do well. And then 20%, 22% is a tough task to maintain. So to my mind, I mean, people should not be jumping to buy it for investment purpose. Trading place can still be there. And my fair valuation for trend for, say, FY27 earnings estimate is around 3,500.
And you're saying the fair valuation multiple should be 40 times PE, and currently it's at 70 times PE. So there's still a lot more PE derating to go. Ramesh, coming on Reliance Industries, what exactly is responsible or the reason behind the sharp fall of 5%?
Yeah, it's surprising to see such kind of a fall on Reliance Industries in a single day, and without any specific news flow, surrounding the company. So, I mean, just now Prashant pointed out that maybe the retail division valuation may be under some scanner. But I would like to highlight here that if you look at the retail division of Reliance, so in SOTP valuation, what we have calculated is around 2x of what the total revenue it does. Whereas the likes of Trent and others in the same basket commands 6x to sales in their valuation multiple. So I think if that is the reason why the stock price is correcting, it's a very good opportunity to buy Reliance Industries, which we have been recommending to our clients even today. So to my mind, I mean, this is one division which will get you a SOTP valuation higher than the Geo platform put together. So, I mean, it's a clear buy to me in such kind of a falling scenario. Till now, I have not come across any news flow which is significant enough to have such kind of a price correction in Reliance Industries.
Okay, all right. Dharmesh, wanted your view on Divi's Laboratory. That's a stock that's getting in trade. Post a bullish note by Citi. Ekta joins us to run us through that note first. Then we go across to Dharmesh for his view. Ekta?
Well, yes, Citi has a buy with a target price of around 9,140 rupees on Divi's Labs. They think 2026 can be an inflection year for Divi's. The company has a strong pipeline of catalysts over the next 12 months, notably GLP-1 as well as contrast media. Now, various custom synthesis products are also maturing, which may be commercialized in the near term. The generic segment, too, is expected to witness a recovery in 2026. The quarterly numbers may experience volatility, according to them, and present forecasting challenges. But the medium to long-term story remains intact. They believe that Divi's revenue and EBITDA can expand by 3 times to 4 times over FY25 to 30, and FY27, FY28 EPS is 10 and 18% respectively ahead of consensus.
Okay, all right. Thanks a lot for that, Ekta. Dharmesh, what's your view, Divi's Laboratory?
Yeah, hi, Nigel. I mean, no more speculation kind of analysis in this market because, the note itself says they expect a volatility in quarterly numbers and it will be difficult to forecast the numbers. But medium to long term, they are having a bullish view. So I think this is not a market when you can build on hopes and try to build on numbers on that basis. The numbers which have been delivered by companies and which are doing well with the clear-cut management commentary, backing that up, are the ones to be looked into. And there I think Lupin stands a very good chance. If you look at last 2 quarters, Lupin's number, they have an excellent set of numbers with margin improvement and 25% plus growth in the profitability. And Torrent Pharma, that's the another company which we liked from the pharma space. So Torrent Pharma may be expensive, on the valuation metrics, but Lupin is still cheaper compared to a Sun or a Cipla. So, and the currency benefit, the tailwind is anyways there for all the pharma space and the chemical players because largely they export. So our topic from the space would be, Lupin and Torrent Pharma. Divi's, I mean, it's we'll leave it at that.
Sorry, expensive, is it, Dharmesh? Afternoon.
No, Divi's, I mean, I'm not very clear on the profitability trajectory of Divi's.
Okay. No, I just checking there. What else? I mean, I think there's a fair bit of. I think that IEX here. I'm not sure if there's any update really which has come through, but the IEX case is in the appellate tribunal today, and some have been making the case that maybe, given the stock is basically bombed out, and given the fact that in the last hearing. There were those really explosive allegations, which basically said that the person who was kind of been at the helm of passing those orders on market coupling traded the stock and profited. Absolutely wild. And because of that, I mean, it's possible that the appellate tribunal may pass a stay and then look at the matter afresh. I mean, it's all hope, but that's a talk with regards to IEX. Dharmesh, I don't know if you have any thoughts here on this one.
Yeah, Bashad, I mean, this should be avoided because market coupling will definitely happen over a period of time. That is bound to come. I mean, the time frame may be decided by the authorities. At the same time, if you look at the kind of a grid supply with all these power companies are now doing. So this time itself, there were 13% drop down in the the per unit power rates. So, but that will again be a drawdown on the commissions which they are. So I think though the stock price has corrected significantly, but still it's not worth a look at this juncture from investment perspective. I mean, trading plays pop-up can still be there, but we are suggesting a clear avoid on this company.
Yeah, no, absolutely. A point taken. I remember when this entire market coupling issue started. It's not. I mean, the government made its stance very clear. The power minister at that point is on record saying that, well, they want market coupling and things like that. So, I mean, it's not just some one committee which has kind of pushed it through, and now that can be voided because of the allegations. So, point completely taken. We'll wait, of course, for what the appellate tribunal says, because as I said, the case is on there. Let's talk about Bajaj Auto, which is the other stock which is up. MK believes that the company offers attractive risk reward at current levels. Sudarshan is here to detail that for us. Sud, over to you.
So Bajaj Auto, since the time it has announced auto sales for the month of December, has been in the focus, and in the last 3 weeks, stock has risen as high as 10 to 11%. Now today, MK has come out with a note upgrading the stock to buy from add and has increased target price to 11,100 from earlier target of 9,500 per share. That implies upside of 15 to 17%. And the reason there is an upside in the target price because it has increased the EPS estimates for FY27 and 28. That is in the range of 4 to 9%. It believes that Bajaj Auto offers attractive risk reward at the current levels. But what's the reasoning behind the upgrade? First, domestic market share for Bajaj Auto seems to have bottomed out, and in the last 1 to 2 months, it has gained the market share, especially in its focus segment of 125cc plus. Second one, export momentum continues. Recently, for third straight month, export sales have been more than 2 lakh units. Next one is electric three-wheeler has been seeing the improvement in the total sales, and also rupee depreciation against dollar is going to aid to the margin. And lastly, there can be an upside from the KTM that MK believes that will also aid to the total growth.
So thanks very much for that. That is Bajaj at this point in time. What else is happening? I mean, I think it's pretty steady, but you've done about 100 odd points or so as things stand. Swiggy has been down from the morning, is down about 5.5%, and has got very, very large volumes, mind you. CSB Bank is seeing some profit booking, but had a one-way rally with the management with us after the third quarter updates yesterday. There is Infra, which is down 9%. We've talked about this name earlier. So 1322, but again, I mean, it's a huge performer over the last many months. So just some pullback there. Viatech Vabag is another one. Is down about nearly 5%, 12.23. Allied Blenders and Distillers is down about 4.5% at this stage. Gokuldas exports is in the 600 rupee handle now, 675 on Gokuldas. So just a complete collapse, from the time, if you remember, this is late November when there was a lot of chatter that the India-US trade deal is close by, etc., etc. I mean, price had run up to about 950 or so, and it's at about 675 as things stand right now. Nigel has walked across to the F&O desk with a quick snapshot view of what trade is like and what is positioning looking like now. Nigel, over to you.
Well, as we've been pointing out, Reliance Industries, that's a big drag in today's trading session. That continues to weigh even in today's trading. If you look at the F&O picture, there are fresh shorts that are seeing out there because the stock is down and open interest has surged up for a counter of this particular size. And if you just pull up a contribution chart, you'll see X of Reliance Industries, actually, the stock would have been, the market would have been in the green. Moving to a couple of other data points, the PCR, in a matter of 2 trading sessions, it's moved from 1.5. Yesterday, it went above 1.5. Currently, it's at around 0.83. That cooling off was required. That's happened as well. It's moving to the lower end of the range from moving to the upper end of the range. All this in a matter of 2 trading sessions. The lower end of the range is around 0.7. That's because the call writers, they are having a gala time today. So if you look at the 26,150 call, or you see the premium crash by around 80%, 26,200 call, the premium out there is around close to around 95% or thereabouts. So aggressive writing is what we are seeing. Just going by this, the call writers, well, they'll believe that this 26,225 odd, that's the level that they can defend. But on the downside, till this 26,000 mark holds out, the bulls will believe they're in for a better time for the remainder of this series. Moving to the Nifty Bank, well, that one, in fact, is outperforming today, and it continues to hold close to 700 points away from its 20 DMA. Individual stocks in focus, IIFL Finance, one of the stocks we pointed out yesterday, they had, they have gold exposure. That's coming for a bit of a short covering bounce. It's been strong the last few trading sessions, and now the shorts are covering out. You have MCX as well that's seeing a bit of a short covering bounce in today's trading session. While on the flip side, Swiggy, I don't know what the street is reading out here, because the open risk built up is massive on that particular counter, more than 50% built up, and fresh shorts are being seen in the system. So I'll keep an eye out on Swiggy from here on. Havells on the flip side, stock is corrected a little bit from the top. Fresh buying is what we're observing on this counter. Back to you.
Thank you very much for that. We'll also take the opportunity to thank Dharmesh for joining us on Closing Bell today. We will get into a break. On the other side, we'll connect with Rupen Rajguru. Stay tuned.
Okay, welcome back. I just want to highlight some information which is coming in on IEX. I think the stocks moved about $2 from the lows, where it was at about 220. And the intraday will tell you that, okay, it's moved up even more now. It's about 3.5 rupees on the day. And I think, of course, from the lows, it's come up quite a bit. But, these are just observations. So the tribunal is saying that we were told that this was done, that this coupling order was done for some officers to make money. This is what their observation is, that this is what they were told. They say a lot of theatrics in making these coupling regulations. Regulations could have been done quietly by CERC. Expect CERC to be independent, above suspicion, like Caesar's wife. And they say if there is something amiss, we'd like to inquire and take action to avoid a repeat. So this is not saying this or that in terms of what they're going to do, but they're just hearing both sides and reflecting. IEX, of course, is making the argument saying even without SEBI findings of insider trading, the coupling order is wrong and needs to be set aside, which, of course, has been their point of view for some time now. We have Rupen Rajguru, Head of Equity Investment and Strategy at Julius Baer. Rupen, good to have you with us here. Thanks for joining in. So just a quick, I think our first conversation in 2026. So season's greetings and happy 26 to you, Rupen.
Happy New Year to you and the entire crew at CNBC.
It's a bit quiet, Rupen, isn't it? While the rest of the world is still is doing well, we are kind of continuing on that same trajectory, which is kind of hunting for triggers and not finding too many around. Would you agree, Rupen?
Prashant, I would say these are early days, and yes, from a trigger perspective, India definitely is lacking a trigger. And if I were to just look through from a global setup perspective, so typically any global allocators, they would look into 2-3 things, before allocating money. So whether either you are a macro trade, or you are a momentum trade, or are you a mispricing trade? So does India qualify in any of these three? Probably not at this juncture. Probably the macro trade currently from a global allocator perspective is still, precious metals, which is where, a lot of money is going. Momentum last year was AI. We have to wait and see whether this year how it will pan. And mispricing, while India has underperformed, but has India gone into a valuation zone, say, at what China was a year back? Because China clearly was a mispricing trade. Probably not. So in that sense, India is lacking trigger. So probably what will change would be the earnings. And I think that's historically always been the reason why market moves up. We have to wait and see how this quarterly earning pans out. But at the margin, what we believe the earnings growth going ahead would be much better than what it has been for last 6 to 7 quarters. So that's the setup. And we have to wait and see if the earnings comes through. Definitely, we will be in for positive surprises from the market.
Rupen, hi, afternoon. This is Rima here, and season's greetings. Happy New Year to you. You've liked airlines in the past. It's a sector where we are seeing consolidation, lowering of competitive intensity. There was a dominant player. Now, in early and middle of December, there was a crisis unfolding at India's dominant player, Indigo. Now, at such a time, we saw the stock price also fall very, very sharply. Did you use it as an opportunity to add to your holdings in airlines, or has it changed your view on the sector?
Hi, afternoon, Rima, and Happy New Year to you as well. So overall, our view on the sector still remains positive. And while definitely the news flow around December was a little bit concerning, and there has to be some readjustment in their overall, the way they do the hiring and all other stuff. But at the end, there will be definitely an impact in the quarterly numbers. But as a theme, we continue to like it. While because of the noise, we definitely saw the stock kind of giving off some of the gains which they had done in the last year. But from the overall theme perspective, and it also adds into our overall theme of premium consumption. So we continue to like this theme, and the incumbent, the largest player, definitely from a cash flow or operating cash flow perspective, we believe next 2 years they will make a very good amount of operating cash flow, and then post correction, definitely it is a pretty attractive from an overall valuation standpoint, notwithstanding the news flow, because news flow can come, more news flow can come through, but we remain constructive on that.
So did you buy the stock, Interglobe Aviation, during the correction?
Yeah, I would refrain from commenting on individual actions, but we continue to remain constructive on that.
Okay, all right. Hi, Rupen. Good afternoon. Good to see you, Ben. And it's always been good speaking to you, not just about markets. Your positive energy is something that pulls me through sometimes. So good to connect. Tell us about, the tech space, because the first earnings are going to be off the block in the next few days. Rima is going to be in business. What's your view out there? I think in the past you've been talking about that being a tactical bet. How are you placed right now?
Yeah, hi, afternoon, Nigel. Always pleasure to be in on your channel. Uh, you know, as I had mentioned earlier, tech, if usually there is a very strong positive correlation with the Nasdaq. Probably 25 was the first year in which this correlation got broken, wherein Nasdaq broke out and our Indian tech went down. And clearly, the reason was the AI being the new talk of the town and the new global momentum trade, and India was probably not part of it. And also because of the overall uncertainty around tariff, the US spending also on tech and all saw a little bit of slowdown. So come this year, do we see a significant pickup in that? The answer is no. But at the same time, if there is no strong US tech spending, typically the tech stocks or the more essentially the large cap stocks will become more a tactical trade. And as I'd mentioned sometime back on your channel, the PE range of say between 19 and 21, 22. So, it becomes a buy, I'm talking more of large cap IT names when it gets into 18, 19 PE and probably a sell when it becomes 21, 22 PE. So at current juncture, they are more towards the sell zone because it had gone down and it has had seen some recovery in the last quarter. But definitely there is a lot of action in the mid cap space. And while AI is always, India has never been a what you call originator of any new themes, but India has always been an executor, an enabler. So now the big amount of spending has gone into the AI capex, the hardware side, and probably over next 1-2 years there will be more spending happening towards the software side, wherein the Indian guys will come into play. And historically, Indian guys always have been a play in that.
Rupen, I just want to, apologies to interrupt. Pull up IEX. I'm not sure what has happened, but the stock's up 9% now. 9%. Is there something coming out of the courts, the tribunal? I don't know. But the last I checked, the last time I referred to those flashes, there's no addition. There was just observations. But this is another 5% jump on top of the 3% rise that I was sort of talking about earlier. And I'm not sure if, people in the court definitely know more than what we do here, but we are going to make an effort to get you details from what the tribunal says to you quickest and fastest. But it's a massive 8.5% move that we are looking at this point in time. So more in a bit from now, but we're still waiting. What we had and what we put out with us earlier was just observations. The tribunal, the court essentially saying, well, this is what we've been told and this should not happen. And, generic comments like CERC should be above any sort of questioning should be like Caesar's wife, etc., etc. So these are just observations. It's not leaning one way or the other unless there is something new which has come through from the tribunal, which we will try and get to you in just a bit from now. Otherwise, it is just fun and games. I don't know if there is anything new at this stage, and but we will, as soon as something comes, we will put it out and go across to Ashmit, who's covering this for us. Hormuz is here with the spotlight on the top movers out there. Hormuz, tell us more.
Oh, well, the one that is making the spotlight right now is IEX for sure. But other than that, of course, there are a lot of names that are moving around in the broader markets. Cupid is one such name. It's been in focus all through this week. It snapped a two-day losing streak today. It was down nearly 30% in that two-day fall. But volumes are now almost at par with what we saw on Monday's trading session. But for 4.5 crore shares that have been traded on Cupid, the 20-day average is around 76 lakh shares. And out of the last 7 years in the month of January, Cupid has delivered negative returns in 5 of those. So January is not a particularly promising month for the stock itself. Keynes Tech is the other one. It snapped a two-day gaining streak today, and before the fall, the stock was trading around subpar volumes. It is still trading on subpar volumes, but they've picked up in the last few minutes. You still had the fall has come on the back of 20 lakh shares that have been traded so far. The 20-day average is around 40 lakh shares, so still half of the average, and the stock is currently trading at a 52-week low. Now, Nigel spoke about IMFA earlier in the day, just a few minutes earlier. Stock now down 12%, the biggest single-day fall since January of this year, actually January of last year now, if I may say. The second straight day of losses for the stock has declined in 3 out of the last 4 sessions. The volumes are the highest since November of 2024, and 20 lakh shares have been traded on Infra so far, 20-day average of just under 2 lakh shares. The stock is below 50 and its 50-day MA. The 100-day MA now on the downside is at 1180, and it's now down in the month of January after 5 straight months of gains. And lastly, Swiggy, you spoke about this just a few minutes earlier, the third straight day of losses now. Over 2 crore shares have been traded on Swiggy, 2.25 if I can say that. 20-day average is just 80 lakh shares. The stock has moved below all of its key moving averages, trading below its QIP price, which was 375, its IPO price, which was 390, and from the post-listing high that it made, which was close to 620, the stock is down almost 40%.
All right, Hormuz, thanks very much for that. Interesting list as always. We're putting out, of course, what we have been saying verbally, that the hearing is still on. No order from the appellate tribunal as of yet, and stocks hanging in there as we speak. Okay, we will get you more update and look at CERC lawyer. We got more, and we'll put this up in just a bit. But CERC lawyer is telling the appellate tribunal. Okay, I think we should be careful how we put it out. But they're saying that we will have to consult and seek instruction on withdrawal of the order. We wanted to make sure the coupling order is more consultative, fair, and transparent. And we'll take up the issue with CERC members. We'll take instruction on withdrawal of the coupling order. So this is what the CERC lawyer is telling the appellate tribunal. CERC, of course, is who passed the order, and now they're telling the appellate tribunal that we wanted to make the coupling order more consultative, fair, and this is, of course, we are picking up bits from the hearing which is going on. So there is a context to this. Both sides, of course, are arguing in court, but we're still waiting with regards to actual order. An actual order, but I think we can put some of this out, especially the bit about. I think this is CERC more than anything else explaining, saying, I mean, that entire bit about theatrics and whether this should have been done quietly, but essentially they're saying that we wanted to make the coupling order more consultative, fair, and transparent. I guess this is in response to the theatrics comment from the court. But they go on to say that we will have to consult and seek instruction on withdrawal of the order. And we'll take up the issue with CERC members. We'll take instructions on withdrawal of the coupling order. So we're just purely stating what CERC is telling the appellate tribunal. This is still not an order. This is still we reporting the what's happening in the court. With on one side there is CERC, and on the other side there is IEX, and we're just reporting verbatim, almost verbatim, what each side is saying. So that's about it. Stocks locked up, upper circuit. It's a 13.5 odd rupee move now coming through at this point in time.
Basically, CERC is telling Aptel that if they give the order to withdraw coupling, then they will do it, and then they will seek instructions. We still don't know whether Aptel is giving the order to withdraw coupling, but market seems to be taking a hint.
Yeah, it's as we were saying earlier, the basic. The funda was that maybe downside is limited. Zyada se zyada aapko dusri, they'll extend and say, well, the case is going to be heard another date. Or so, okay, then it is unchanged.
Yeah.
On the other side, if something may come true, it's a chance. So that is how many were treating it. But once again, I just want to say that no order yet, and we'll repeat that once again. We are reporting verbatim from the comments which are being sort of said by CERC and IEX on the other side to the court at this point in time. We'll try and have Ashmit, of course, a little later, because he'll be inside, and of course he's sending us the information as the proceedings are going on, and we'll try and have him with us as we go on. 10% higher. I think we should take a quick break. Don't want to miss what else comes out of the course. So let's just do that. Let's take a very quick break here. We'll come right back in just a bit.
A bit of an expiry-related factor playing out. The losses, in fact, on the Nifty have now been cut down to around 60 points. There's a wee bit of a recovery that we're seeing. NTPC has spiked up a little bit. Apollo Hospitals continues to rally. Well, that stock is putting on some weight. It's moved to the high point of the day. And I think Asian Paints as well now at the day's high. Well, time to move to these. Yeah.
I think we've got more information. So the IEX thing, right? Councils on both sides, CERC and IEX, have sought more time, and the tribunal has decided to hear the case next on the 9th of January, which is in 3 days' time. Friday. Friday is when the case will be heard once again, so that's it. I mean, that's basically, I'm assuming the hearings are over and the case has been put to be heard once again on the 9th, which is this coming Friday. Stock was limit up, frozen 10%, and it's moved up a little bit more, 11.5% now. So we'll see. But no order from the tribunal, and the tribunal essentially is telling the CERC lawyer, has told the CERC lawyer, if you tell by Friday on potential decision by CERC to withdraw coupling order, we'll close the case on Friday itself. Okay, they're saying that that's what's coming through. I'm not sure what this means. So the court essentially is asking the CERC lawyer that if you tell us on your decision whether you want to withdraw the order, coupling order or not, we will rule on Friday itself. That's what's happening. But the information, the operative information, of course, is the fact that the next leg of this hearing will happen on Friday, which is the 9th of January, at this point in time. So it's a big, massive move, and almost all of it coming through after 2:30 once we started the show. The hearing, of course, was at 2:30, and almost all of it. I mean, the low was at about, I think, 132 or so. So from 132, it's a move all the way to about 150 rupees now on the IEX stock. That's essentially the line. If you tell by Friday on your decision, we'll close the case. That's the court telling the CERC lawyer. Nigel.
Well, that's right. Now let's move across to Nimesh. He's here to tell us what he's picking up in D-Street Chatter. Nimesh?
Hi, Nigel. Under pressure today, but not a bad outcome given the fact that so many large cap names are under pressure, including Reliance, and still the Nifty is down only 70 odd points. So that gives a bit of a comfort that not everything is bad and ugly in today's market. Having said that, there are negative flows, is what I understand from FIs, and largely so in the broader market. So some of the large influential desks are having aggressive sell flows from larger FIs in the broader market names today. So that's overall from a flow perspective. From a sector stand, I guess Pharma stands out today, and metal, of course, has been the big sector which is outperforming largely on back of the underlying assets going strong, and that's one specific which has done well. But Pharma has added in today's market and some bit of buying as well. And in fact, there are some triggers as well for the Pharma stocks, including some of the individual names like Aurobindo, Glenmark, and also that's playing out in some of the individual stocks. But I guess this reaction on the quarterly updates is going to continue, at least in the near term. We saw that what happened in trend today. It took 7 days or 8 days for trend to rally 5-6%, and in single day it's given 10%. So that kind of reactions will happen and will continue. But broadly, from a flow perspective, today is a day when there is selling pressure in broader markets.
What about stocks, Nimesh?
Well, so the first stock on my list is Bliss GVS. It's a small company, 2,000 crore market cap. It's up 10% and very large volumes in today's market. My sense is that could be some corporate development on the cards. A potential M&A is a buzz as far as Bliss GVS is concerned. So that's the first stock. The second name is Inox India. Well, the stock has been consolidating. I understand there was a selling from a larger FI that's getting absorbed by some domestic mutual funds. And one FI entity is a buyer as well in Inox India at current level. So that's the flow there. The third name is Religare. Again, the stock saw a bit of a spike in yesterday's trade. And again, for Religare, there is a strong buzz that maybe some corporate development is on the cards. There is a sense that maybe there could be a demerger on the cards with regards to the various businesses. So that's the buzz as far as Religare is concerned. And the last is Eternal. The stock has actually corrected from the recent highs of 350, but the selling continues. Even today, I understand there is aggressive selling from larger FIs in Eternal.
Okay, all right. Thanks a lot for that, Nimesh. Well, let's hop across to Mitesh Thakkar. He's back with us to give us his trading calls. Mitesh?
Yeah. So I think, Nigel, we're not closing with strength, neither with kind of weakness. It's come off a bit, but the important point for me today is that we are closing below 26,200. So a mild negative on the index, don't carry longs on the index per se. On stock side, STBT on Oracle Finance, keep a stop at about levels of 76.25, maybe a rupee above that, 76.26, and look for 75.50 as the target. While Petronet is a BTST with a stop at 293, and a target of around 300.
Thank you very much for that. Back to the commodity space. The rally in metals is showing no signs of stopping. Manisha is now joining in. Manisha, give us the latest.
It is a very strong start to metals in 2026. 25 was a year that you saw all-time highs in gold, silver, copper, platinum, and that's exactly what 26 seems to be doing, building up onto those gains. So overnight has been anything like a 3 to 5% of a gain, and in this year we've seen 3 to 10% of gains come in for many of those metal prices. Copper is trading at all-time highs. This is on the back of concerns over potential US tariffs and also a mine in Chile. The workers there are now demanding a part in profit in what copper has seen. Remember, all-time highs, 45% of gains in last 12 months for copper. So labor wants a part in that as well. Aluminum is trading at a 3-year highs. You have China looking to curb production. Also, when you look at key smelters in Iceland, Mozambique and Australia, there are concerns there supporting aluminum prices. Nickel is trading at a 1-year highs. This is after Indonesia says that they're looking to look at 34% reduction in nickel production going forward. Iron ore, which didn't do so well in 25, also seems to have started 26 on a stronger note as Chinese steel makers are restocking iron ore ahead of the Lunar New Year holidays in the month of Feb. And then you have zinc trading at a 14-month highs because of global inventories continuing to decline. Silver gained 5% overnight. You have heightened geopolitical tensions and then China export restrictions in this year. All of that supporting silver prices also. Markets from here on would of course look at the US non-farm payroll data that comes in on Friday. Further gains could come in after that.
Well, as you said, Manisha, aluminium stocks as well have been on fire, but investors, they are asking, will it rain? What I'm hinting as is what's the buzz in Rain Industries? Remember, the stock in the last 1 month is up close to around 40%. It's still 20% down, though, from its 52-week high. The street seems to be viewing Rain Industries as an aluminium ancillary play. Remember, it produces CPC as well as cold tar pitch. Both of them are used in aluminium production in different proportions. The aluminium segment contributes close to around 42% of Rain Industries' total revenue mix. Spreads, remember, have been improving. The company has been coming out of a rough phase. Remember, the last few years have been rough, but the last 2 quarters, they've been delivering numbers of around 600 crores on a quarterly run rate. And now the street is hoping for a recovery, particularly in 2026, if you just pull up the EBITDA numbers. Valuations, there is some support. It trades at less than 1 times price to book and on EV upon EBITDA at around 5 times. This further gets some support because in Rain Industries, you also have a 4.3 million ton cement unit, which is sub 10% of the total revenue, but replacement cost could be as much as around 4,000 crore rupees. They've also laid out a bit of an expansion plan on the cement business. What to track from here on, though? Debt refinancing, debt reduction, that's top of mind. The last reported debt is close to around $800 million odd. And the management has indicated that they're watching the markets closely. They're looking at an opportunity to optimize interest cost. And they've also mentioned there are no major term debt maturities all the way till October 2028. Besides debt reduction, the street will be tracking the spread between GPC, which is the input cost, as well as CPC, which is the selling product, which has improved of late. And also a smaller part of their business is their advanced materials business. 20% of the mix ramping up there is going to be important. In terms of fund participation, ICICI Prudential, under various schemes, they have gone ahead and they've been steadily increasing stake in the company. Time will tell if Rain Industries can participate in this big aluminium cycle that we are seeing. Well, that said, I think we can move on to our next segment and welcome the next management. We have Jay Bala of cashthekiosk.com who joins us on the show. Hi, Jay. Good to see you in. Looking good with that sweater. Looks like, I believe it's quite cold in UK. But wishing you a good 2026, Jay. And hopefully those highs that you were talking about last year, we get out there. So let's address the Nifty first. Where are we headed?
Thanks, Nigel. Happy New Year to you and the rest of the team at CNBC-TV18. The markets are have come to record highs from where we have been pointing to that possibilities since April of last year. But today's price action, rather yesterday and today's price action are a little bit discouraging. The Nifty hasn't seen follow through to the fresh record highs, and the key pivotal Reliance, after clocking fresh record highs at 1611, it's caving in, and that's not an encouraging sign for the bulls. But that doesn't impact the medium-term picture. We still maintain the 29,000 call that we have been holding since April 2025. But the short term could get a bit volatile. But as long as the Nifty can manage to hold above 25,690, I think it's in a safe zone. But if 25,690 were to break, this new high might be a short-term bull trap. So we don't want to see the markets drop below 25,690. Keep that as an important support level.
Okay, all right, got that. What about individual stocks? Let's get those ideas first out of the way.
Yeah, I think ICICI is trying to offset what Reliance is trying to do on the downside. So I'm bullish on ICICI. The setup there is a breakout from an inverse head and shoulders pattern. The stop loss at about 1335. I think the stock can scale something like 1520 from current levels. So the structure for the banking index as well as SBI is looking incomplete. So, but a little bit of caution because this is a stock that's kind of offset what Reliance and HDFC is trying to do. So a sensible allocation here would be a call for the day.
Trent?
Yeah, Trent, I'm mostly negative on most of the FMCG names. Negative in the sense I'm not going to be bullish, and Trent falls within that category. I would anticipate one more low below the December or the 2025 low for Trent. Post that, it has a bottoming out potential. So I would expect Trent to hit somewhere about 3,800. And I would avoid all the FMCG names at current levels. I would treat any bounce within the entire FMCG pack as a counter-trend bounce rather than start of it.
Talking about bounce, what about Bitcoin? Where is it headed? Just a few days ago, it was losing its way, and the way it burst up last evening was spectacular.
Yeah, I'm bullish on Bitcoin from medium-term perspective, Nigel, but I'm not completely sure that the 80,000 odds that it saw in the late part of 2025 was the final low for the corrective decline. So let's split it into two halves. In the short term, I'm anticipating a modest break below the 80,000, and then resurgence in the medium term back to about 150,000.
Jay, stay on. Need to slip into a very short break. But as we do that, we also want to get our viewers' views coming in from Sunil Singhania, founder of Abacus Asset Manager. He told CNBC-TV18 that India's journey from a $4 trillion to an $8 trillion economy will be aided by new age companies. He also remains bullish on financials and metals. Listen in to his views.
We are not saying that everything which is new age or new economy is bad, but, I think there also one will have to distinguish. And we are very clear that we would want to give capital to companies which will use that to grow, not to burn. And therefore, perennially loss-making or cash flow burning companies are something which we should avoid. The other thing is it is very difficult to value these companies. And, more often than not, one gets sucked into a momentum kind of a thing. So I think that is where I would say that we have to basically be a little bit careful. When we grew from $0 to $1 trillion in terms of economy, that was contributed maybe jute and cotton and, textiles and some utilities, some steel. 1 trillion to 4 trillion, the path in terms of the economy, I think the contribution came from private sector banks, IT services, pharma, a lot of consumption-oriented sectors. And it is very clear that when we move from 4 to 8 trillion, I think a lot of these new age businesses will contribute a lot to that journey of 4 trillion to 8 trillion. So you can't write them off. We were positive on 3 sectors and we continue to be positive. 2 of them have worked out well. So all kinds of financials, including some NBFCs, non-fund-based financials, predominantly asset wealth management companies, insurance companies, I think they have done very well. Banks also have been doing reasonably well. Growth rate obviously have slowed down to maybe, low double digits, but very good asset quality. Metals have done phenomenally well for us, and to some extent we were lucky because it got helped by what is happening globally in terms of metal prices. Pharma is one sector where we are positive, which has not worked out in the way we would have liked to, but I think there is a lot of more there. Both domestic pharma, global pharma, I think there's a little bit of overhang of any negative news which can come in from the US front. But Indian pharma has a lot of moat. So I think pharma is one sector where we would like to stick our necks out and be a little bit more overweight.
Okay, that's an important market voice as far as Sunil Singhania from Abacus goes. Ashmit is now joining in. He's, of course, been reporting on the going on in the court with regards to the market coupling case. Ashmit, take it away. What really came through today, and what did the court say? We know the next hearing is on the 9th, but what went on in the court, and what does it tell us about which way this is headed? I'm not asking you which way this will go, but what did you pick up?
Well, to begin with, important to clarify that the hearing is still underway. The Aptel hearing is still going on. And in the course of the hearing, we're given to understand that the issue that was raised last time on the issue of insider trading, on the issue of possible involvement of CERC officials in making money through the coupling order, that issue came up once again for consideration. The Aptel, which was in fact hearing this matter at the very outset, said that this is an issue that is of concern to them, that they saw a lot of theatrics at the time of passing of the coupling order, that they did not understand why there was such a dramatic regulation taking place, and that if there is in fact something foul, this will be something that the Aptel will be looking into. But that's one side of the story. The other side is, importantly, that the CERC councils who were also present, who were also a part of this hearing, importantly, gave an indication that the CERC had wanted for this process to be more fair, had wanted this process to be transparent, had wanted this process to be consultative. And having said that, the CERC lawyer submitting before Aptel that he will be seeking instructions from the Commission on whether there can be a withdrawal of the coupling order altogether. This is an important bit of clarification that the Aptel said that it would welcome. In fact, the Aptel said that if this hearing comes, if this clarity comes before the next hearing, if it comes by Friday, then this could very well lead to a closure of this entire matter altogether. That would also meet any concerns that the IEX, the Indian Energy Exchange, might have raised before Aptel. So that is something that more clarity is awaited on. Will the CERC Council raise this before the Commission? What will be the stance of the Commission? That is something that more clarity is awaited now. But clearly, the last word is yet to be had. The hearing, we understand, still continuing before the Aptel.
If I can just come in here, the issue, from what you heard the CERC, the IEX, the CERC Council say in the court, the issue is that this order, IEX of course is saying that even without all this insider trading, etc., this should not be done. The order itself should be set aside. Leave that for a moment. What CERC is saying is their stance on whether they'll withdraw, not withdraw, etc., on the basis of this entire insider trading thing, and so set this aside and pass a fresh order. Is that kind of what the thinking is, or it's like a revisit of the entire matter itself, that whether this needs to be done? Did you get any sense on that?
Well, at this point, the CERC, at least the lawyer appearing before the Aptel, the language used does not link it one way or the other to either the insider trading charges or whether there is a question of natural justice not having been followed, not enough consultation having been done. No reason being attributed as to why this submission is being made by the CERC Council, but nonetheless, the clarity that is coming from them, from at least the CERC Council, is that there is a thinking within, at least within the legal team of CERC, that perhaps there should have been a more transparent consultative process. And with that, the submission being made before Aptel, that perhaps there may be a need required for withdrawing the order itself. But this, of course, is a lawyer appearing for the Commission. This is not what the Commission's final submission is. And of course, this is something that the lawyer will be looking to get clarity on from the Commission on what the road ahead as far as the coupling order is concerned.
Got that, because that is essentially the crux of it, right? I mean, even if they withdraw it, do they still want to do market coupling, and will that result in a fresh order without the shadow of all these other charges which have tainted the current order? That clarity, I think, as Ashmit said, the hearing is still underway. We'll leave you to it, Ashmit, And we'll track this one as we we'll keep coming back to you through the course of the evening to get more on this story. It's an important one. Stock, of course, ending strong, ending almost 10% higher. Went up almost 13% at one stage. 146, 147 is where we were at. Markets, by the way, picked up a little bit from the lows. 72, 73 rupees down. 26,175 is where we are at. And, I think not very much has changed. Oil and gas, both private, Reliance, the OMCs, this is the pressure area, the pressure point in the market. On the other side of the equation, there's metals, PSU banks, which did pretty well. So that's the picture. Lots of these individual casualties like Trent, 8.5% cut after revenue growth continues to slow down. Q1, Q2, Q3. I mean, it's basically been a bit of a declining trend in terms of revenue growth from that company.